for you to get excited, or is it just another opportunity, as always, for investors? Ben, I'll start with you, mate.
This is a time I look forward to as well because, you know, we've gone through a pretty quiet period the last few months. It's been an unusual earnings season, I'd have to say, Andrew, in that we have seen some incredible volatility as companies have delivered their results.
Haven't we? What? Yeah.
And I don't know if it's like technology or, you know, the algorithmic trading, which, you know, really does play a big part in our market. But, you know, yesterday we saw car sales drop down to $10.10 and it closed at $11.30 today. CSL's gone up $7 in 2 days, which is an ASX 10 stock, I think. And realestate.com fell 9%, then it bounced back 5%. I mean, it's almost like the market's trying to read these results so quickly that it's creating almost havoc. It's also creating opportunities, but it's all happening so quickly that it's almost impossible to take advantage of it, which is a bit frustrating. But look, by and large, I think, you know, companies, the better quality companies seem to be delivering on expectations. The market is much more focused on outlook this year. And anyone that's sort of softening down expectations on outlook there's no sort of second chances. They're getting hit quite hard. So you've got to be active, I think, during this time because this is a time when you want to get your portfolio right for the next 6 months. You know.
I was just wanting a bit of information about Telstra. I can't really understand. Everyone's saying what a bonus it is, the buyback. But I can't see how it's a bonus when you've got to buy your shares from 1 to 14% at a discount.
Yeah, it's a really interesting question and a lot to sort of talk about there, John. Ben, I'm going to start with you first. Before we get to the buyback in particular, what did you make of the results overall?
I thought the result came bang in online. The result looked artificially good because they sold a business called CSL in Hong Kong.
A big business.
A big business, and they booked a big profit on it. And that made the headline number look good, but the underlying number was bang online. And the guidance was bang online, Andrew. And you know, they lifted the dividend by ½ cent. That was good, but expected. And then the off-market buyback, unexpected but good.
So, okay, before we talk about this buyback in particular, perhaps you give the viewers a bit of a rationale behind buybacks in general. I mean, the call is right. I mean, the only way you can participate in it is if you sell your shares, and perhaps if you're a long-term shareholder, particularly maybe one in Telstra who's got a bit of an income focus, it's kind of removing your exposure to, what's the rationale that companies...
Okay, so the rationale is, from Telstra's point of view, let's use this one as an example. As the caller, John, correctly said, they're going to send letters to shareholders saying, do you want to sell your shares at a 14% discount? That's what it'll be done at a 14% discount to the current share price. 9 out of 10 people will get that piece of paper, look at it and say, why on earth would I do that? And throw it in the bin. But there's value in that letter for the right tax environment. So if, as a lot of people, you're in a self-managed super fund in a zero tax environment, so you're in pension phase in that fund.
A fair degree of Telstra shareholders, potentially.
A lot of Telstra shareholders. Franking credits are incredibly valuable. And of that, so say, let's take a rough example. Say they're going to give you, I think the example they used was $4.66, which is less than the current share price. $2.33 is a capital return, and $2.33 is a fully franked dividend. But once you add the franking credits that you'll get onto the fully franked dividend, you're actually selling it at the equivalent to about a 4% premium to the share price. Now, why the market liked it is, it's good for investors in that tax environment because they'll be able to sell some shares in October. It'll be heavily scaled back. They'll be able to sell some shares at a premium to the share price. From the company's point of view, they're paying out less cash than their share price is actually worth. They're going to cancel $1 billion of shares, which is EPS accretive for their result down the track. And they're using the franking credits, which the market wasn't really putting any value on, to top up. So it's a win-win for both sides of the deal.
What do you like or not like about Woolworths?
Just a couple of points I wanted to make. Thanks for taking my call. Just with Tony, with banks, I just quickly have to disagree with you, Tony, because the government changed the rules in 2010 and they introduced a word called serviceability as opposed to asset lending pre-GFC. And now if you can't service a loan, you can't get one. And I think the government's done the banks a big favour. But anyway, I wanted to talk about Woolworths and Masters looking forward to their 2016-17 review of their profits. The business model of the Masters store just seems to me me concern me a bit. It seems to be like a cross between a Good Guys, a hardware shop, and cash and carry. It just doesn't seem to sort of be definitive in what it's doing, but I'm just a bit concerned about Masters and the drag on the Woolworths share price.
Yeah, John, thanks for that. And we are definitely coming back to that issue of property, China and the banks, by the way, but we will get to Woolworths first. Here's the thing with Woolies, right? They've got to find growth somewhere. They've got to move into new categories or maybe even new geographies. They've got to do something. I guess the question is going into hardware, was that the right thing? Is it just a case of too soon to tell, or is this something that's really sort of destined to fail longer term? Ben, I'm going to start with you this time.
The other thing that they could have done was buy something, and
yes.
that could have been a bigger disaster than spending 6 years of capital and maybe losing, you know, $800–900 million in building a business. John, I tend to be more optimistic on Masters than most. I mean, you know, certainly it's disappointing that this is being pushed out, and I think a bit embarrassing, to be honest, to the company. However, I think it's inevitable in time that they will get this right, purely because they've got such incredible buying power, and as they continue to build the sites, and hopefully Lowe's, which I think is important, sticks with this joint venture, I think in time we'll look back and say that it was a worthwhile investment. The other thing I would say is that in the scheme of things, it's really not a huge amount of money versus the Woolworths juggernaut. I think the negative news that we saw on was it on Monday? Or was it on? I've lost track.
I remember
Monday
that. It wasn't that long ago. Yeah.
But the stock was down 30 cents or something on the day that they announced it, and I think that told you two things: the market had already worked it out, and a lot of analysts were saying these exact things, and secondly, it wasn't particularly material. So you know, we like Woolies, and you know, we will continue to hold the stock. And I would say outside of the hardware business, it's reported very well the last 3 times that it's reported.
Hasn't it?
And let's hope we see that again.
Magellan Financial, I believe, has caught your eye.
Well, yes, I'm currently an investor in Magellan Infrastructure and the Global Fund.
Mm-hmm.
But I'm thinking of taking some money off the table and moving from Coca-Cola and partly Westpac Bank and investing in Magellan Financial Fund. I'd like some comments from you about that.
Okay, guys, Magellan MFG is the code that I've been given here. Are either of you two gents familiar with these guys?
Yeah, I certainly am. Literally, as I was walking out the office to come here, they reported their result. So I only very quickly looked at it, but you know, it looked very, very strong. I think 60% plus earnings growth. I don't think the result's going to be a big surprise, Jeff. I think the outlook is really the key for this group, and it is a hard stock to sort of provide advice on, because if Magellan can continue to grow their FUM the way that they have, and I know that internally they have a target of 50 billion that they are looking to get to, and they're at 23 billion that they manage at the moment.
It's not internal anymore.
Yeah, I think they said that publicly now. But if they get up to close to 50, it's the buy of the century.
Right.
If they plateau out here and start to, you know, fall off,
right,
it's a sell. And that's purely because of the incredible operating leverage that exists on their balance sheet. Yeah. I think personally that Australians are waking up to the fact that they need more exposure to international shares. It's a big wide world out there, and we don't have very many truly sort of global companies. Yeah. And I think there are 2 really world-class acts in terms of managing that money, and that's Platinum and Magellan. And financial planners will dictate these flows. So I think that they're a good chance of continuing to grow. And I think it looks like a buy. But the other thing you have to take into account, if the markets fall heavily, then their FUM also drops, and likely money starts to get pulled out. So
it's a double whammy, isn't it?
It is. It's not a stock that you can just sit on like a Woolworths for the next 5 years. You have to monitor it, and you have to keep looking at the monthly updates as to FUM, and keep thinking, what's my view going forward?
What do you think, Ben? Is this one that you can leave for a time being, or is it?
I'm interested, definitely, Andrew. I think Alison Watkins needs to reset parts of this business, and
SPC, I suppose, is the one that most people will refer to. Yeah.
But even like Coke having, as you're saying there, they've got an incredible distribution system that they could utilise other products, I think, going through.
Just push something else through the network. Right?
Absolutely. Yeah. And one thing I will say about Coke, which I reckon is a pretty big negative, is, and we were talking about Woolworths, when you speak to the people selling products into the supermarkets. They've got so much power now that they're really getting screwed down on pricing. Where are you going to put your goods? And if you go into a Woolworths now, there's the Mount Franklin water, and then next to it is the Woolworths home brand water, which looks identical and is half the price. And I think that is a real, that's a bit of a threat to the business. And Alison will need to, to find some ways that she can, undoubtedly, harness what they've got there, but maybe into sort of other areas, and that's what she's being paid, a lot of money for, and she did it well at Graincorp.
For a pizza shop, right? And that was then, this is now. Ben, can they keep doing it?
I'm not in it, but I actually think they can, Andrew, and I think they can because the management is outstanding.
You bet.
They're moving towards really a technology business, as we all hear, and they've exhibited that they can roll out stores and ratchet up growth at an incredible rate. They've gone into Japan, they're in Europe, they're in Australia, and they have done incredibly well. I mean, we looked at them long and hard when they did the Japanese acquisition. That was earlier this year, and can you believe it was trading at about $11?
Which almost seemed expensive at the time,
It was expensive at the time. It was the one thing that put us off, and now it's 23. It's just crazy.
So it's a PE of about 42 for those playing along at home.
But it is growing its earnings at greater than 50% a year. And if you're, and I'm the first to say, if you take a long view of a growth stock, I don't worry quite so much about next year's PE. If I think realestate.com can grow its earnings at 30% a year, in 5 years I'm paying low single digits PE, and it won't be trading at that price then. But it will be very volatile along the way because it's a stock that gets targeted as we've seen in the poorer markets. So we're not there. I wish I was there. And I can't bring myself to pay 23 now if I couldn't buy it at 11. We own Certex. So we were later to the game. We were buying it at the start of the year around sort of $13, but it's still had an incredible run. I think it looks a little bit pricey the short term. Of course, the elephant in the room is that they've been running a trial for 6 years called Surflox, which is looking at whether their treatment plus chemotherapy is more effective than chemotherapy. That comes out in the first quarter next year. There's probably some excitement coming to the share price as we get closer. If that outcome is successful, and anecdotal evidence sort of suggests that there's real hope for this approach, it will go from being a salvage treatment to a frontline treatment. And from less than 5% of cases, liver cancer cases it's currently used in, it will become, used much, much more widely. And the company's biggest problem will actually be getting the spheres to all the people who need them, because it doesn't have the manufacturing capacity to do it. It's building it, but it's going to take time. But
mind you, a good problem to have, though, right?
A great problem, and it will be the biggest step change to earnings that you'll ever see. However, if that doesn't come through, there's going to be some pain on the floor.
Absolutely, and that's, I guess, where the valuation concern comes in. There's a lot of sort of expectation sort of priced into that, and again, if it comes out well, that's going to be fantastic. If not, I mean, they've still got a business without a lot of these other kinds of things.
And that's what we liked about it.
And it's not as binary as the other, of course. I mean, we wouldn't recommend it if that was the case. So it's actually a real solid business underneath all of this. But obviously, the market is going to be pretty myopic in its focus. That's the thing that's going to be keeping them there.